Hello, I'm Regina McCann-Hess, president of Forge Wealth Management. And today we're going to talk about the age of 59 and a half and why this age is so important. That age, 59 and a half, marks a turning point of sorts in your life on a number of fronts. In particular, the Internal Revenue Service allows you to make withdrawals from your retirement account without incurring a penalty. It has also been nearly a decade since you were granted the right to make your catch-up contributions to your IRA and your 401k. Also, in roughly 30 months, you'll be eligible to claim Social Security benefits. So you're about 66 months away from Medicare eligibility. So in this video/podcast today, we're going to explore your retirement choices, your healthcare concerns, and how to move vibrantly into those golden years. We also turn back the clock to take a quick look at how history may have shaped your outlook. Keep in mind, tax rules are constantly changing, and there's no guarantee that the tax landscape will remain the same in years ahead. If anything, we can guarantee is that it will change. So please consider working with a financial professional before implementing or modifying a retirement strategy. So the first thing is building your retirement savings. Some research suggests you should have at least saved $1 million in retirement savings to get you comfortably through a 30-year retirement. Some retirement savers say there's a 45% chance they expect to run out of money during their retirement. In fact, 22% of baby boomers, now those are the people that were born between 1946 and 1964, they report having less than $25,000 in retirement savings. If your retirement savings are not quite up to par, the IRS provides a catch-up clause that allows for people over the age of 50 to put more money into the retirement plans. So older employees may exceed the IRS's standard elective deferral of $20,500 in 2022 to their employees' workplace based retirement savings plan. Elective deferrals are basically contributions to retirement plans by the employer at the employee's request. So you basically just have it taken from your payroll and it goes right into the plan. Now, deferrals apply to 401ks, 401bs, and several other retirement type plans. And if you're in a nonprofit or some government type jobs, 403b may be very similar in idea to a 401k. The catch-up is for 2022 is $6,500, and it applies to the following plans: the 401k plans, the 403bs that I just mentioned, and 457 plans. Deferrals to retirement plans must exceed the standard $2,500 limit, again for 2022, to be counted as catch-up contributions. So basically you have to save the $20,500 first, then you get to do the catch-up contribution on top of it. You can make annual catch-up contributions if the amount is less than the catch-up contribution dollar limit, or the excess of the participant's compensation over the elective deferral contributions that are not catch-up contributions. Now, catch-up contributions are $3,000 for a simple plan, and the simple plan stands for Savings Incentive Match Plan for Employee Individual Retirement Accounts, which is exactly why we call them simple IRA plans. A lot to say, so we just refer to them as simple IRA plans. These plans are often used by small business owners. Now, you can make a $1,000 catch-up contribution to your traditional or your Roth IRA in 2022. To qualify for the tax-free and penalty-free withdrawal of earnings, Roth 401k distributions must meet a 5-year holding period and occur after age 59 and a half. There's that magic number again, 59 and a half. Tax-free and penalty-free withdrawals can also be taken under certain other circumstances, such as the result of the owner's death. Employer match is pre-tax and not distributed tax-free during retirement. So, under the Secure Act, which is the Setting Every Community Up for Retirement Enhancement Act, once you reach age 72, you must now begin taking required minimum distributions from your 401ks, 403bs, 457b plans, or any other kind of defined contribution plan in most circumstances. So withdrawals from your 401k or other defined contribution plans are taxed as ordinary income. If taken before 59 and a half, they also may be subject to a 10% federal income tax penalty. So again, there's that favorite age of 59 and a half. If you take anything out of your retirement plans before that 59 and a half, in general, there are certain exclusions, but in general, you're getting that 10% federal income tax penalty. Once you're past that, you don't have that tax penalty. You only have to worry about the regular tax that you would be paying, regardless of whether or not you're before, under, or over 59 and a half. So now remember the Secure Act that was just passed a couple of years ago. They changed the age, the required minimum distribution age from 70 and a half to 72. So now once you hit 72, you must begin taking those required minimum distributions from a simple IRA in most circumstances. And withdrawals from simple IRAs and traditional IRAs are taxed as ordinary income. And if taken before 59 and a half, again, you have that 10% federal income tax penalty. So if you can avoid taking it out before 59 and a half, it's a good thing to try to do to avoid those taxes and the tax penalty. So what else can you do to boost your retirement savings? One approach is to focus on saving rather than spending. A common and typically unproductive approach to retirement saving is setting wrong priorities, and that would be spend first, save second. So many older workers tend to tuck away money periodically rather than implement a consistent, disciplined savings approach. A better approach would be to shift your money to savings or investment accounts at the beginning of the pay cycle rather than the end, when little extra money remains to be set aside for the future goals or the future needs. So if your employer doesn't offer a retirement plan, consider establishing a traditional or Roth IRA and having a designated portion of your paycheck go into one of those accounts at the start of the pay period. You may also want to consider looking for an employer who does offer those plans, because if they do offer a plan, you can save a lot more with a retirement plan versus an IRA. My own opinion. Making your way towards Social Security. Okay, so hitting the age of 59 and a half puts you within shouting distance of Social Security eligibility. In fact, to break it down, you're within 130 weeks at the earliest. American workers are eligible for Social Security benefits at age 62, but at a reduced rate, a reduced amount. Let me repeat that. If you take your Social Security at age 62, you will take a reduced amount, and that reduced amount will follow you through your life. So please talk to somebody before saying, hey, I'm 62, I want to turn my benefit on, because you don't realize you could be giving up a lot of your benefit by doing that. Although you're still a ways away, here are some changes to Social Security for 2022. Social Security recipients in 2022 received a 5.9% increase in benefits. So that's a pretty big pay raise, especially for Social Security. And the Social Security Administration attempts to match annual increases to inflation based on the Bureau of Labor Statistics calculations. And of course, we have had a historical year for inflation in the past year or so. So that could be, contributing to the fact that Social Security did give its recipients such a large increase. The full retirement age continues to rise by 2 months a year. So the full retirement age of those who turned 64 in 2022 is 66 and 8 months. The annual full retirement age increases will stop in 2022 at age 67. So basically, you're either, if you're approaching Social Security, your full retirement age is going to be dependent upon your birth date, but most likely it's somewhere between the ages of 66 and 67. Now, here's the other thing. I alluded to this a little bit earlier when I was talking about not taking your benefits early. Your Social Security benefits will rise by about 8% for every year you delay your receiving your benefits. So if you wait until age 70, you'll receive 124% of your determined benefits. That's a lot better than, taking a lower amount. That doesn't mean you have to wait till age 70, but do consider your options for waiting till full retirement age, and definitely speak to somebody, a financial professional, about that. The Social Security Administration does use a formula to calculate your basic benefit, or what they call the primary insurance amount. This formula indexes your highest average monthly earnings over 35 years of work. And in 2022, the average monthly benefit was $1,666.49. And I'm really glad they threw the 49 cents in there, because the three sixes in a row, a little spooky. So the other thing, the average monthly spousal benefit is $837.34 in 2022, that is. So another thing that we want to talk about is staying healthy. And a big part of looking forward to retirement is making plans for what you want to do with the time that you have and the money that you have. It's no fun to picture yourself spending more time at the doctor's office than pursuing your interest. So for many Americans, preparing for retirement means taking care of their personal and financial well-being. The good news, it doesn't need to be too complicated. In fact, it's possible that choosing a relatively uncomplicated strategy for your health will be easier for you to stick to and maintain. If you enjoy it, you can always adjust it to meet your lifestyle. Walking, for instance, can be an effective way to control your weight, keep your body strong, prevent or delay certain diseases and ailments, and even keep you sleeping better and maintaining a better mood. Those with mobility issues may seek out some other form of aerobic exercise, but 30 minutes a day can make a huge difference. I mean, I was actually just talking to a client today, and she was telling me, her and her husband go to the gym at least 3 days a week, and they're consistent about it. They are very active, they stay active, and they feel pretty good. And then she was comparing herself to another couple that they are not active at all. They're not going to the gym. They're not, like, taking care of themselves. And she sees a big difference in their outlook and their health in general. And that's not anything, a professional opinion. It's just a client who is actually in retirement, living it, and saying, like, hey, I feel better because I go to the gym 3 days a week and I work out, and I feel like I can move around a lot better than if I just kind of sat and still and had a sedentary life. So I always like to throw those little tidbits in there that I learned from my own clients. So let's also talk about, like, if you need to break up the walks, you can do it in shorter spurts if needed to meet your daily goal. Eating better can be a tough sell. I can attest to that. I try and I fail, and I try and I fail. But that's because you don't want to do like a strict diet. For some, it's better to take smaller steps rather than force drastic changes that might be tempted to abandon. In some cases, it may be about more rather than less. For example, more fiber can take a wide variety of forms. So can taking on the Mediterranean diet by adding more fish, whole grains, and vegetables to your meals. Eating better doesn't mean that you're saying goodbye to things like fatty meats, butter, or sugar. I cannot live without my sugar. You all know that, right? I'm total candy junkie. So I do need a diet that has sugar in it. So I'm trying to live by what I talk about, but it's difficult. But if you're trying not to, you're trying not to exclude everything, you're just trying to eat a little bit better, it just means you're diversifying your diet to include a wider variety of nutritional foods with occasional indulgences. There you go. So, not all moves to increase your health are about your body. Many may benefit your mental well being. And maintaining a positive outlook may feel difficult, but it can come from spending more time doing hobbies, seeing old friends, developing new friendships through activities, getting out into nature, or like even as simple as exploring a museum. However, you spend your time, it's important to remember that this is your time. It's up to you to find ways to enjoy yourself. So, in conclusion, you want to get some financial guidance. You're approaching a major turning point in your life. A financial professional can help you discover wise solutions and develop smart retirement strategies for a fulfilling and exciting future. We can also help you analyze your financial situation to help shape the life you envision. So, your call to action today is work with a financial professional to build, modify, and implement a retirement strategy that's right for you. Thank you for joining me today. Again, I'm Regina McCann Hess. My website is forgewealth.com. You can follow me on Facebook, Twitter, and YouTube at Forge Wealth, and on LinkedIn, Regina McCann Hess. Don't forget, go work on building, modifying, and implementing a retirement strategy that's right for you. Have a great day.